Curious what the fundraising environment was like for these two funds, given a very challenging macroeconomic backdrop.
Yes. Hi, Emily. Good to be with you. The majority of these new funds were, in fact, raised last year, and this is our 12th year. These are Fund 8 and Select 4, so early stage and late stage number 8, late stage number 4. So we've done quite well, and we have very loyal LPs. We've been able to capture some new LPs as well. So it hasn't been really it hasn't been exceptionally hard. I would imagine that today for new funds it would be pretty difficult.
So how is the changing macro environment changing your strategy and where you're going to place your bets?
So we are quite well known for our consumer companies, companies like Warby Parker and Casper and Allbirds and Glossier and many others. But in the more recent years, we've also been very focused on B2B, on enterprise software. We're less known for that, but we do over half of our investments in those areas, and those are at the moment very exciting. And we're looking forward to kind of balancing our consumer business with our B2B business.
Now, venture capitalists are announcing big funds left and right, but it seems like there's not a lot of places to put this money. I mean, is there just a lot of dry powder sitting on the sidelines that's, piling up, while valuations come down and the economy resets?
There is a record amount of dry powder, as you say. What we're finding is that funding at the seed and pre-seed level, which is our specialty, continues at the normal pace. Series A as well is our companies are getting funded at the Series A, but where things are much slower is in the later stages, Series B and beyond, and that's got to do with the fact that late stage investors are really not sure about how to value companies. But as soon as the market kind of settles in the later stage, there will be plenty of money to be put to work.
So are you waiting for valuations to come down? Is that sort of what I hear you saying?
In where we invest at the seed, valuations have moderated. They haven't yet come down to kind of pre-2021 levels. But we take the very long view, and so we invest in a good year and a bad year. Our companies are going to start maturing years down the road. So we find valuations to be more attractive today for sure. But more importantly, we have more time to do our work. There isn't the frenzy that existed last year where people wanted to close their rounds in a matter of days. Now we're back at being able to close the round in a matter of weeks, giving us plenty of time to do our work and our due diligence.
So what's your take on, another meeting from the Fed? Rate hikes seem to be continuing. How is that impacting your outlook?
The biggest impact for venture capital at the moment, it has to do with the fact that the IPO market is dead in the water. And so companies that wanted to go public this year are postponing that particular event. And that always has an effect on the M&A market as well. If the IPO market is slow, the M&A market is slow as well. So, last year we saw a record amount of liquidity. We returned an absolute record of back to our limited partners. This year it's much slower. But again, we take the long view. You'll have a down year, you'll have an up year. Over a period of time, it doesn't really matter.